Well, hello and welcome to the Lending Podcast. We are your hosts. This is JB, the guru of mortgage, and I'm Jeff Jones here. We are in Austin, Texas. For those of you new to our podcast, we love talking about real estate and making sure that people who have a dream to own a home can find a way to do it. So we bring all kinds of advice from the lender perspective, and we have a great wealth of networking. So we try to bring in more guest speakers. If you're out there and you'd love to be a guest on our show, please like and comment about who you are. Introduce yourself. If you already know us, text us, email us. We'd love to have you on. We're expanding our interviews. So today is a new episode, and it is the start of a second month in 2025. And we wanted to talk about what is going on and what we're seeing, because things are changing in our industry quite a bit. What are we saying, JB?
They are. Activity is way up. I will
up.
tell you that, way up. So we just ran some numbers this morning in our office so far, just in the short window of 2025. Our application volume is up over 200%.
Increase from last year to this year.
Increase from 2024 to 2025.
Yeah.
And our closing volume is up 400%.
What?
That's a big number.
That's a big number. So we have closed this year to date 400% more than last year to date. And
Correct.
We're just in the second month.
Let me preface that also by saying that the beginning of 2024 was pretty darn bad.
Well, yeah, no, that is true. But, you know, there are seasons to our industries. For those that have been in this industry for more than 5 to 6 years, if you've been in it for 10 or 20 years, you'll notice there's an ebb and flow. And there's a season of life that buyers go through. You know, January usually is a very quiet month.
It is.
And so is February. Spring really is the launch of a lot of home buying. And so is like fall, right?
Yeah, closings in January and February are usually fairly low. Closing volume, that is. Activity, like the aspirational buyers, the conversations usually ticks up in January because a lot of folks have a New Year's resolution or they have a goal coming into the new year. I'm going to buy a house. This is going to be my year. And we love those conversations, right? Because that's really what we do. We're facilitating home ownership through lending, through mortgages. Honestly, let's take a little step back. We have a lot of cash buyers out there. That we may not actually be financing their home. I had a conversation the other day with a newly divorced lady. She and her husband decided to part ways after 25 years. And the house that they're going to sell, they own a home now, have a ton of equity, and she has a very modest income. And her agent, my good friend, agent, and the buyer, potential buyer, were on the video call with me together. So all three of us are on the call. We love that, by the way, because it's really looping in there's no lost in translation in the conversation. Agent, buyer, lender together. And the question was, should she take out a mortgage, small mortgage, and maintain, hang on to some of that cash? And we ran the numbers, and it just, quite frankly, didn't make sense. And we're in the lending industry, and I encourage
work yourself out of a job
to pay cash. So
I love that about you, because you do the right thing.
Well, I appreciate that.
Yeah.
I mean, it really is taking care of the customer. That's what we're doing. We're taking care of our clients, and we're giving advice based on the information we have, the best advice that we can give based on all the info. Now, the key is, do we have all the info? And I think that's really the most important thing, is going through sort of an interview process. That was an hour and 20-minute phone call for me to get to a determination that it really probably makes sense for her to pay cash. Now, once the house sells, she has the cash, we can reevaluate. Yeah. Maybe she does put a small mortgage on the house of $50,000 or $100,000, but she's going to net over $600,000 on this sale. Go buy something for $450, pay cash, put the couple $100,000 in the bank in a conservative investment that'll preserve her wealth. That's going to be her nest egg for retirement, and move on. She's in her later years of her life. So I think that perspective, what you need out there as a buyer, as a real estate partner, an industry partner, is good guidance. And the only way to really get the good guidance is to get kind of financially vulnerable, can we just say it, with a lender who's been doing this for a long time. Jeff and I have over combined 30 years of experience. I'm going on my 24th year. Well, I shaved the beard. So my beard was getting, for those of you that have been watching for a while, my beard was getting very gray. So I shaved the beard. And now I had a comment the other day that someone said I didn't look my age. And I felt that made me feel good. So,
sweet.
Because I'm pushing 50. But yeah, so, looking at the entire picture,
Mhm.
looking at someone's entire financial picture and putting a plan together is really our passion and facilitating that home ownership. And so we wanted to talk today a little bit about who's buying. So the activity's up 200%, 300% or more. It's 2025. What's causing that? Why all of a sudden, and maybe Q4, Q3, Q4 of last year of 2024 were pretty slow, and they were relative to past Q4s. I mean, the end of the year usually brings some urgency for some sellers to close before the end of the year, for some buyers to close before the end of the year. We didn't really see that as much in 2024 last quarter.
Yeah. So, to set the stage a little bit, I like that you've been doing that is, we're trying to give a picture of what year over year is. But over the last 3 years, 2.5, rates have nationally been averaging around 7%. And it's hovered slightly below, slightly above. And we're still at that exact same spot, right?
We really are.
And so it's been a limbo of 2.5 years of not much rate change. So, and to be honest, like it's even compressed where the movements are even smaller than they used to be. So what that means for the buyers is that people that have been waiting to buy, if you're out there listening, you've been waiting to buy, there's a lot of people that are now ready to buy. They've settled with what that means for their monthly budget because they've talked to a good lender. They settled with the realtor about narrowing down their perfect home because you can get really picky right now, and they're ready to buy. And those people are really entering the search right now, and they're really entering the home buying. So what that means is this might be a perfect time. If you've been on the fence, this might be a perfect time for you to buy. I love that you talked about having that realtor on a call. If you're a realtor out there and you have not been on a call with a lending partner and your buyer together, it is a phenomenal experience. What that does, is it just synchronizes the conversation so that everyone's on the same page to get the best offer in and to get the best closing opportunity for that buyer. Because now everyone knows the buying power, what they're comfortable with, what kind of products, if there's concessions needed, and all that great stuff, all up front, all at the same time.
That's right.
And it creates a direct line of communication between a realtor and a lender that is very needed in this day and age.
Well, it's huge too, because how many of us have had 30-minute, 45-minute, an hour conversations? You get off the phone and the next person you talk to, what did they say? What did they say? And you're like, I just had an hour.
Right.
Like you're trying to summarize an hour conversation in 2 minutes. It's impossible. I mean, it's really hard to do.
It is. And the stuff we go over is very technical.
It's very technical.
So
you may have, and let's just preface by saying a lot of our conversations are buyer lender without our realtor partner.
Majority of them, yeah.
Majority of them. But if we can, as industry partners, be on those calls more often together, I mean, that we were, like you said, synchronization, we were all in sync.
Yeah.
The buyer left the call feeling so much better that she's trying to preserve this nest egg. Like, what should she do? Now, had her income been a little higher, because again, she has a modest income, an hourly job, and I analyzed some of those numbers. And depending on the determination there, I might have said, yeah, take out a $100,000 loan, keep that cash, let it work for you and your investments. I mean, we all know the average in the S&P in the stock market over the last 50 years plus is over 9%. So if you've got cash sitting in an investment account invested in the S&P 500, you're making 9% return plus, maybe more, on your investments. What are borrowing rates at right now? 7%. So we're really getting hung up. I think a lot of folks are getting hung up in rates are high. Okay, they're elevated from a few years ago, but so are our returns. Our returns on our investments right now is high. Savings accounts are paying 4 and 5%. Right. You can just stick money in a savings account and make a good return. Now, as the Fed drops the short-term rates, we may see those savings rates come down. We will see those savings account returns come down. But the S&P, the stock market, may still go at that 8 to 10% return. So that's looking at it holistically. We talk about this a lot. It really isn't one size fits all. It has to be customized to your situation.
Right.
And so let's kind of talk about some of the buyer profiles that we're seeing right now.
Yeah, the buyer profiles are great. Before we do, I want to talk about the real estate agent one more time.
Yeah.
Because we partner. They're our biggest referral partner. As a lender, most of our business comes from real estate agents. We have a lot of past client referrals because people love working with good people, and we've done a good job taking care of our people.
Past clients.
Thank you. And a referral is the best thing we can get because that's how we make money. We don't get an hourly wage, neither does your realtor. So they want to find a good partner. A real estate agent wants to have a good lending partner because if you're able to have, a real estate agent and a lender work really well together, that client's going to feel like they're taken care of. They're not going to feel like they're siloed out trying to figure out what's going on between the two. And when your client is well taken care of, you're going to have a better closing ratio because you're going to convert, they're going to feel better about the purchase. They're going to go through the process all the way more. So that means, on a conversion scale, if you're used to getting like 100 leads and closing 10, now you're getting 100 leads and you're closing 30 of them. That's a much better life as a realtor.
Absolutely.
So all I'd say is we love our realtors.
Yeah.
Sorry, I'm going to cut you off because I'm going to go a little long on this comment. Yeah. What we've seen over the last couple of years is an attrition of realtors and lenders. Mm-hmm. And so who is left in our industries are usually the best people.
True.
So we've there's not enough volume that used to be there to support a huge inflow of realtors and lenders. Yeah. But now that it's been really small numbers of volume of buyers, the people that have remained in our industry are really proven. They're really good at what they do because they've had to be to survive.
That's true.
And so the real estate agents, the quality of transactions have gone way up.
Yeah, for sure. Yeah, there's definitely been, I think the stat I read recently, here we are, 2025. 4 years ago, there were, I think it was like 400,000 loan officers, and now there's under 100,000 nationally. Whatever the number is, it's like a 70% reduction in the lending workforce, if you will, the loan officers out there. And I would venture to say the real estate profession, licensed agents, is probably a similar number. Forgive me, I don't have that number, but it's probably similar, like to your point, attrition. ChatGPT, that's right. Our phones are listening right now. They'll probably have the answer already on my phone. I just can't see it. So that's a good point. I mean, our real estate agent partners right now that have made it through this 2023, 24 kind of a downturn in the market volume-wise. It's not been a downturn in the market value-wise. We haven't seen values decrease. Sure, there's value in the marketplace. We've definitely seen some houses sell for below list price. That's possible. We're also getting contracts in that are multiple offers and going over the list price still. In 2025. So
to interject, I know we kind of do this back and forth, but the numbers for February are looking like they're still on par for 4,200 people a day moving into the Austin area. Or not a day, sorry, a month. 4,200 people a month, which is almost the exact same number as it was when I moved here 6 years ago. Yeah. So it's like 130, 140 people a day relocating to Austin. Yeah. And so those people need places to live.
And there's like 2 leaving, maybe 5, I don't know.
We love this place.
There's a few.
I don't know why you go.
Yeah. So that's a really good point. The population growth. Who are you talking about that's moving their headquarters?
Oh, Realtor.com is moving their headquarters from Santa Clara, California to Austin, Texas.
Yeah. So we're seeing a lot of relocations.
Texas is the largest growing industry for housing in America. So it's the fastest growing state of housing transactions. And so Realtor.com, I think you can look at interviews, but they have other reasons, but that's one of the biggest ones.
Yeah, that's huge. So companies moving here. So Central Texas, but Texas in general, we talk about this. Yeah. The Dallas-Fort Worth area where I'm from, growing like wildfire. Right. Houston, San Antonio, we have this
corridor,
this big triangle, right? Yeah. DFW to San Antonio, Houston over. So this massive growth model over the next 10, 20, 30 years will increase demand. And we're not talking about prices skyrocketing. We're talking about the gradual growth. We're talking about solid appreciation, the investment of an asset in real estate that's going to continue to grow over the next 5, 10, 15 years. And so the clients that we've worked with that have waited a couple of years to buy, because maybe they missed out in 2020 or 21. Right. 22 was kind of a weird year because things were moving really fast. Rates were really spiking quickly. And we did, with good reason, have some clients that just pulled back from that and said, I'm going to wait and see what is happening. But now it's been 2.5 years, and those clients that waited have missed out on about 10% appreciation in the marketplace on average, 3 to 5% per year. So the cost of waiting, it's an analysis that we've done before on the show. It's really something that we like to do with our buyers. Like, what does it cost you? You're paying X amount in rent. Your mortgage is going to be a Y payment. There's going to be a difference there, maybe a little less, maybe a little more. What is that cost of waiting if we decide, you know what, I'm just going to rent for another year? And I think that's where, coming back to the buyer profiles right now, we're seeing folks that are saying, I'm tired of renting. I'm tired of being in an apartment. I'm tired of having a landlord. I want to build equity through real estate, and I want to convert my rent payment into a mortgage.
Yeah, and let's talk about that equity growth real quick. For a lot of people out there, they might hear a percentage number, but let's put some dollars to it so that it's real. So say you're a first-time home buyer, you're buying a $400,000 home.
Yeah.
10% is 40 grand, right? So you buy this house this year. Say you make 100,000, right? And as a salary. And next year your house is now worth 440,000. So say you sell it. You just you just made $40,000 just in equity. Doesn't matter what you paid down, but just the value of your home has gone up that much in 1 year.
Yeah.
So think about, how do you make $40,000 plus you're living in it, but you made $40,000 in a year just owning the home.
Well, and something we talk about, which is the cash on cash return of your investment. So let's say you do buy this $400,000 house, 5% down, which you can do 3% down, but the math is a little easier for this example. 5% down would be $20,000. If your house goes up $20,000 in 1 year, that's 100%
return,
cash on cash return. You put down 20, you bought it for 400, now you owe 380 because you put down 20,000. Now the house goes to 420, and you've literally put 20,000 down and you've made 20,000. That's 100% rate of return. If you made 10% return in that example in 1 year, it'd be a 200% return.
Yeah.
These numbers are bonkers, but it's important to think about. Not only can you get the appreciation rate of your home, the entire value of your home for a small down payment, what if you didn't put anything down? If you bought a $400,000 house using a down payment assistance program, had the seller pay your closing costs, you get it, or some combination of seller and grant program paying your closing costs, which we have available, you could potentially get into a home for close to zero out of pocket. And if that house goes up 5% in the next year, you just made $20,000 return on a zero cash investment. That's an infinite return. You can't calculate it.
Right. And I'm glad that you brought that up, because this is the reason why a lot of people are buying right now is they're tired of renting. They know that being a homeowner has been a part of their dream. It builds one of the fastest ways to build equity wealth in your life. It's a stepping stone for a lot of great things. Plus, you control your castle, right? You have a dog, you have kids, whatever. You just want your own space. You want to turn your music up, whatever it might be. Like, that's all yours.
So let's talk about, I'm not going to use names, of course, but let's talk about some buyer profiles that we're working with right now. Just give you the high level. Okay. So I have a client, mentioned her a second ago, newly divorced, looking to sell a home and buy a home, right? And possibly pay cash, maybe finance a little bit. I have a client who is a physician, who he and his significant other, they've been looking for a home for a couple of years, push the pause button. Now this year, it just seems like the timing's right, and they're probably looking in the $1 million price point. I have a client who's looking to sell her home. It's about a $400,000 house, and buy a tiny home and move on to 3 acres.
Oh, adorable.
And so she's just going to pay cash for this tiny home. And we had a consultation the other day. We have a first-time buyer couple that we just closed 2 days ago that put the minimum down. They put 3% down. If you're going to use your own down payment, that's the minimum down. A client that closed yesterday who is recently divorced as well, she bought a house before her other house with her ex-husband is going to sell. Once that house sells, she'll have a pretty sizable chunk of cash. She'll put down on this mortgage that we just got, and we'll redo the loan. Either we'll recast it to a lower payment, or we'll just do a complete new refinance if rates are lower. And so I have an investor that lives in Florida right now that's buying a property in Austin. He's putting 40% down, and we're not documenting any income. It's a debt service coverage ratio loan. It's a DSCR loan. It's like a commercial loan. So the wide array of programs, those are just a handful off the top of my head this week that I'm working with, that we're just seeing folks from all walks of life. So it's not specifically, okay, this is the first time buyer season. This is the all-time buyer season. And it really is buyers from all over. However, I will pinpoint for our first time buyers, there's so many more options out there. And not just options for homes, options for loans, options to get you in down payment assistance and grant money. And the client yesterday that I talked to needs some work on her credit score. So I spent some time this morning giving her about 4 action steps, and she needs to get her score up considerably, like about 100 points. And so typically a lender might look at that and say, oh, well, your score is 100 points below the minimum. Go fix your credit and come back and see me when it gets higher. No, our buyers need a plan of action. They need some guidance and professional counsel. We don't have to use a credit repair company. I gave her 3 or 4 very simple tactics that she needs to do. It's a little bit of homework. She's got to make some phone calls. It takes a little bit of cash, but she'll be able to work on her credit and be in a better position. Her time frame is 6 months.
There you go.
We talk about this all the time. Talk to a lender well before you need to.
Right.
So that you can plan. Luckily, she's calling me in essentially February, and she needs to do something in August, right? Yeah. So we're 6 months out. So we have that runway.
No, I like that a lot. If you're listening to this podcast, we're in our 50-something episode, almost end of our 50s. So if you're curious about the things we're saying, down payment assistance, if you're curious about investment loans, bank statement loans, we have podcasts on that. So feel free to check out our channel and look through. We title them as simple as we can for that purpose. You can find things quickly. But I think this is good. In closing, I kind of want to talk about mindset a little bit.
Let's do it.
So you and I both are very astute on reading up of what's going on in real estate, the housing market, and politics, and the economy. We read a lot, and we have a lot of things coming our ways to digest. So what I wanted to say was not just spitball in here of just a job security, that this is a good time to buy, but the reality is it's a very good time to buy right now. And I don't think we hear that enough out there in the news. What we're hearing with recession, job claims, the political craziness that is constant, it is a very good time to buy. So if anybody is out there and they're not sure, they know they want to, they don't know when, they just know they want to do it, it doesn't hurt to talk to a good lender. It doesn't hurt anything. It only helps. And so if you're out there wondering, is this a good time for me? I don't have money. Maybe I need credit improvement. I have all these things that have been keeping me waiting. Don't internalize that. Talk to a professional. Talk to a good real estate agent. Talk to a good lender. Most of us lenders just ask ahead of time, are you doing a soft credit pull on my credit? Because I just don't want to hit on my credit report. We do soft credit pulls at the beginning until you're under contract. So it doesn't hurt anything. It doesn't cost you anything. It just takes time, and you get to talk to a great partner.
Yeah. Yeah. Getting a little vulnerable with your financial situation can be scary. Getting a little vulnerable with your credit situation, your assets. Again, this lady that I talked to yesterday, I felt, my heart went out for her on one hand because she really has no other assets except for her house.
Yeah.
And then we really shifted the conversation to, yes, but you have this awesome house that you're going to be able to sell and have over $500,000 that you can then take and go buy something else. Now they've had the home for 20 years, right? You don't just build $500,000 in equity in a year or two. A lot of times, takes time. This is a slow game, and we talked about before. It's the time in the market. Get into real estate. Get into the stock market. Let those assets marinate and grow, right? Because the real estate, if you check your home value every single month, you're going to see some ebb and flow. But over time, I would challenge anyone in a 20-year period to go find a 20-year period where real estate's gone down, and you won't find it.
Right.
Sheer population growth is driving that. In Austin, Central Texas specifically, obviously we're in Austin. We talked about other parts of Texas are very, very strong as well. Central Texas, our backyard, the growth here is phenomenal. The company's moving here. And yes, it's been bumpy the last few years, uncertainty. Let's just say it's been uncertain. There's been some uncertainty, right? Well, now we're seeing clarity. We at least have clarity from the standpoint of it is now 2025. We know exactly where we've been for the last 2 years, and rates haven't really moved. Now, if this is the worst rates get, then that's a great thing. But what if rates go a little higher? You're gonna be wishing you'd bought when rates were 7 if they go to 8 or 9%. So if you're fearful of rates going up, then now's your time to buy. If you're thinking that rates may go down, now's your time to buy, because when they go down, more buyers are going to come into the market. It's going to create more competition. So it's a really unique time in our business,
right?
Specifically in Central Texas. Yes, there's more real estate. The feedback I'm getting is there's more options, but not maybe a ton of quality options. So there might be 5 times the inventory, but it's not 5 times the amount of beautiful, gorgeous, turnkey, ready to move into homes. It's 5 times the quantity of homes,
right,
a lot of which need some work. So if you're someone who's thinking, well, I can put flooring in, I can redo a kitchen, I can paint, I can do carpet, then there's tremendous amount of value for you.
Yeah.
And then if you're thinking, okay, well, I'm not handy, that's me, I'm not a very handy person. I can do a few things around the house, but I want to buy a home where I walk in and it's move-in ready, right? That's kind of that's my wife's and my style. There's those options out there, and you can be pickier because there is more inventory.
Oh man, I feel like you just plugged one of our past episodes, episode 56.
Oh man,
home repair negotiations.
That's true.
If you find a house you love but it needs changes or needs work, that's a great episode for you, so you can get it and then have the loan work for you, have the negotiation work for you, so it can be your dream home when you close. That's good. Well, I love that we talked about who's buying, who and why. What we're almost at the end of February of 2025, and we're here for you. So if you have things you want to hear from us, we'd love to hear it. So give us a comment right down below. And is that everything else?
We'll see you next time.
We'll see you next time.
All right. Thanks for being with us.